What's up, beautiful people? It's your boy once again, DBM, the Billionaire Mentor. You're welcome back to our channel. Yeah, our beautiful episode. So today we're talking about chart pattern. Yeah, basic chart pattern. There's nothing like basic chart pattern actually. We're talking about chart pattern, how to use chart pattern, the importance of chart pattern. Number one, you have what are chart pattern actually used for. They are used for directional buyers to actually use as an indication or indicator to know if your current trend is going to continue or your current trend is going to reverse. They understand. It's also as a confluence for directional buyers. It's also used for your entry confluence also. You understand? You can use it for your entry model. You can use it for your directional buyers. They understand. So without further ado, let's jump into what we got for today. Come on. Let me see. Alright, so we have different type of chart pattern, like I've said. We have the one that actually shows your uptrend. We have the one that actually shows your downtrend. There's some chart pattern that when you see this kind of chart pattern, it simply means you're meant to buy. You're meant to be looking for buys. There's some chart pattern that when you see the chart pattern, it simply means you're meant to be looking for sales. Do you understand? So all this chart pattern we are going to be looking into everything one after the other. So you have chart patterns like your double bottom, your double top. Those are the basic chart pattern. Your peanut, your cup and handle, or what you call that stuff. You have your head and shoulder, your inverse head and shoulder. You have different types of chart patterns. Do you understand? However, I'll be taking you guys through the psychology of chart patterns. Do you understand? Not just having to know everything. If you actually wish to know the names of all these chart patterns, then good to go. You can definitely have the names of the chart pattern. Do you understand? So, basically speaking, or before we started this whole journey of our Forex beginner class to the advanced level, we were talking about, I said some of you guys in my WhatsApp community, my free WhatsApp community, you guys should message me. So I would, especially the beginners, so I will send you a PDF and some other links to aid your Forex trading or your crypto trading. Some of you actually did, and I sent you this PDF, so you guys should be familiar with this PDF. This is chart pattern. So by now, you have this is actually an interesting PDF. Yeah, I got from one of my mentor, that Willis. Yeah. So by now you should have an arsenal of weapons to use when you battle the market. Do you understand? Yeah, because this is not a joke place. This is not market won't respect your emotion. That's not the truth. So you need arsenals. You need tools. Yeah. So in this lesson, you will add yet another weapon, which is chart pattern. The name of our new weapon for this section is called chart pattern. Say chart pattern. Alright. So think of chart pattern as a landmine detector. I believe you all know the landmine detector, because once you finish this lesson, you will be able to spot explosions on the chart before they even happen. So potentially making you a lot of money in the process. Chart pattern are like, yes, they are funny. Yeah, how will I say? Chart pattern are like that funny feeling you get in your tummy right before you let the fat explode. Just like this, my guy here. This is quite funny actually. So don't you wish to add a chart to detect these explosions? Of course you do. So in this lesson, we will teach you basic chart patterns and formations. Yes, basically speaking, I'll be teaching you the psychology behind this chart pattern. When correctly identified, it usually leads to an explosive breakout. So watch out. Remember, our goal is to spot big movements. You understand? In the market, one of our goals is to spot out big movements in the market before they happen. So do well, right on, and let's jump into some examples of chart patterns. So we have double top and double bottom. This is basic and very, very common. One of the most common chart pattern we have is double top and double bottom. We have head and shoulders, we have the inverse head and shoulders, we have rising and falling wedge, we have bullish, as you can see here. You can message me on WhatsApp, so I'll send you the PDF right away. then jump down there to see. Now, the first chart pattern we have here is the double top chart pattern. How to trade the double top chart pattern? A double top is a reversal pattern. Don't forget, I said we have different kinds of chart pattern in the intro. I said the chart pattern is basically shows either reversals or that is potential reversals and potential continuation of the trend. Do you understand? So yeah, we say a double top is a reversal pattern that is formed after there is an extended move up. The tops are the peaks. These are the tops here. Look at it. There's the first top, and this is what the second top. That's how we call it. What the double top. Do you understand? Let me get my two. I will call it what the double top. Do you understand me? So a double top is a reversal pattern that is formed after there is an extended move up. Look at it. This is the extended move up. The tops are peaks and are formed when the price hits a certain level that can't be broken. After hitting this level, basically speaking, you have your resistance zone around here. Do you understand? You have a previous resistance zone here, somewhere around here. So we have our basic. Let me say we have something like higher low. Then we have this higher here. Then price bounced off this resistance zone, came down again to give us the same equal highs here. Do you understand? Basically speaking, it simply means the buyers do not really sustain ability to break price above this resistance zone. Do you understand? That's why the price will definitely fall back again. So this, when we see this kind of price, behavior, this kind of price chart pattern, would say, okay, we've seen this happen before in the past, and this is actually what's happened when we saw this kind of price behavior. Price can't. You understand? So basically speaking, we see when we have previous higher low, when we get an higher low, what are we expecting? We're expecting to get what? A new higher high. However, when price got to this historical price level, price was rejected away from it. So that's how we have what? A double top. So, and when we say double top, basically simply means a potential reversal. Do you understand? So, when we get a double top, we draw out your neckline around here, which is your your support level. Do you understand? Then you wait for price to break, then retest, and keep on the new trend, which is the reversal trend. That is a downtrend. So, in the chart above, you can see here, just like what I've briefly explained. Now notice how the second top was not able to break the high of the first top. Do you understand? You can see we are not able to give a new top. Do you understand? So these are just basic chart patterns. These are the psychology behind what we call our chart pattern. So it simply means this blow failed to take out this previous existing high. Do you understand? So because this blow failed to take out this previous existing high, that means we have to target this low as our weak low. Yes, as you have actually know, and you've easily answered. So your weak low, this is our neckline, which represents the weak low, or this weak low represents our neckline. So when price breaks this neckline, we want to start selling. That is once you start selling, once price breaks with a full body close, don't forget, you don't want to start selling when you see weak. No, I don't do that, so I won't expect you to do that too. So once you see a full, we can see this candle, we have a full body candle close here. So when you see a full body candle close, that's when you want to sell. So how do we get our entry? We get our entry when we have a close here. Let me zoom in so you guys can see it. I believe you guys should be able to see it pretty nicely. So the break of this trend line, the break of this neckline, which is the support zone before. Do you understand? So this is basic flip zone. This is basic flip entry. Basic flip entry mode where your support become a new resistance here. Do you understand? So the price breaks here with weak, we're not entering until we now see the price rejected and retested here. Do you understand? After this week, the price closed here, they started dropping with this massive dump. They want to sell immediately. Do you understand? So they want to sell immediately. However, you are going to be prone to manipulations. But basic, or most of the time, 70% of the time, 80% of the time, when you see your chart pattern, it will definitely hold if you follow the basic criteria. Do you understand? So, but however, sometimes you would get rocked by the market, manipulated, then price will definitely go back to your, what is it called, your direction or desired direction, or what you actually predicted earlier. However, it's part of the game. So you definitely hit stop loss is part of the game. You definitely hit stop loss. Does not mean this shit doesn't work. No, it does work. Of course, it does work, provided you have everything, all your criteria properly lined up well. They understand. So this is my neckline. Price breaks it. Now, how to get your what is it called, your take profits? Is it how you do something like this? Is it okay? Let me just use this first place. You pick your measurement tool. Look at my measurement tool here, from this top to this neckline. You bring it down again from this place. So anyway, the same amount of pips you are getting from here to here is what you want to extend from the neckline to this place. So this way you're going to put your entry. Your entry is going to be around here. Then your stop loss will just be above this previous candle high. Then your take profit is going to be where? Here. Do you understand? The once price prints this low, the double top has finished its what primary duty or primary what assignment. Do you understand? So any other thing you are doing, you are trying to push price to a subjective low, that is your business. Do you understand? So but the objective target is the height you've gotten here from the top to the neckline. That is same height you actually want to target. Do you understand? So that's the objective target. Or you can do something like this. When we have something like, we have your you have your let me use a plain chart. Then go to my beloved trading view. So basically speaking, we have something like, you have your higher low, higher low, higher. You have your higher low. The one are we expecting next? Higher, right? However, instead of price to give us higher, it gave us what? Equal high. Do you understand? It failed to break this high, and then it came back again. We know that once price does this kind of behavior, it simply means this our buy trend is now in jeopardy. We are not looking again to buy. What I want to be looking for, we will be looking to sell, because it simply means what the chart is telling us now is that buyers have exhausted their buying powers. Buyers have done what? Exhausted their buying powers. What are we going to be looking for? We'll be looking to what? Start selling. Why? Because we've gotten an indication. The chart has told us, hey, bro, stop buying. You want to start selling now. So this is my neckline. This is my what? Neckline. The one I want to do, I want the price to what? Close below it with a full body candle close. Do you understand? I want this thing to close below the neckline with a full body candle close, not with a wick. I repeat, not with a wick. So you could immediately enter here. Do you understand? You can immediately enter here, or wait for a retest. If you want to be conservative enough, you wait for a retest, then dump to your desired level. It could be subjective targets or your objective targets. Do you understand? So let me explain the difference between the subjective and the objective targets. It's not different. It's not difficult actually. Now, your objective target is when you take out your measuring tool. I don't need measuring tool here. Let me just use this rectangle tool. From this point to this low, to the neckline. Do you understand? Then you pick the same thing here. Let me clone it. I'm on my keyboard here. You pick the same low here. From the neckline or from the entry down here to this point here. Do you understand? So you want to put your entry around there, your TP anywhere around the next eye, then your SL. Yeah, this is a subjective targets. Do you understand? This is a subjective targets. Now, but what about an objective target? An objective target is something like, when you have something like this. You have something like this. You have something like this. But instead of us to follow the primary targets by saying you are taking from the measurement from here to this place, they just add it the same measurement here, then put your target, they're done. You now want to do something like attacking this low, yeah. Just because you have seen trainer liquidity, you will get trainer liquidity, you not yet. You now want to target the structure. This is not bad. Most of the time, price might not come there before it even reverses. It might just come and pick this place as your structural liquidity, then pick this place here as pick any demand zone around there, then start buying from there. So you don't want to be caught that way. Do you understand? So provided this is just an objective target here, from here, you don't want to attack here, just want to attack somewhere here. Do you understand? How do we get here? The same measurement you have from this head to the neck is just from the neck to the what, to the leg. And that's basically all we need to know about the double top and double bottom. Basically speaking, these are the same scenarios. You can see that basically speaking, double top is just an analogy of support and resistance. Do you understand? But we're not just trading support and resistance exclusively. We are trading it with a particular logic behind it. What is the logic? That means the buyers failed to create a new high. Do you understand? The buyers failed to create a new high. So we are leveraging on that weakness of the buyers to sell for the time being. Do you understand me? So you can see the logic behind your double top. Conversely, your double bottom, the same thing too. We'll be having your lower low, lower high, lower low, lower high, lower low, until you form equal lows. Do you understand? Until you form your equal lows. When you form your equal lows, you can see it conservatively, we call it double bottom, yeah. When you form your equal lows, you now understand that yes, the sellers are now exhausted. They don't have enough liquidity to push the price downwards again. They have to seek liquidity from the buy side for the now start selling. However, we can see price failed. This lower high failed to give us a new lower low. So it simply means we are having a potential reversal. We wait for the trend line here to break, wait for a full body candle close. When we get a full body candle close here, you can see after we got a full body candle close, we got a retest of this week, then boom to this side. The same way we get our entries. Sorry, do you understand? So we are using this one in terms of entry criteria. Do you understand? Now look at this. This is a very, very beautiful chart example. This is your Euro USD on weekly time frame. You can see now. I like this. Now we use this as a directional bias. You understand? Let me say as a directional bias. That same double top formation, double bottom formation. This is your monthly time frame. We are not saying your monthly time frame, but when we see something like this, you see you have been seeing your higher low, higher low, higher low. So the next week you're expecting to see a new higher high. Do you understand? This is actually an uptrend. However, price failed to give us a new higher high. Instead, it did what? It gave us. So. And this is our last line of defense for buys. You can see it. This is my last line of defense for buys, for the buy side there. So I'm not expecting price to break here. We can see, ideally speaking, we see that we are actually coming from an uptrend. Higher low, higher low, higher low. So we expect this higher low to give us a new higher high. If you understand your basic market trend, you understand what I'm talking about. So we expect this to give us what? A new higher high. However, it didn't. What did it do? Instead, it gave us equal high. It gave us what? Equal high, which we call our double top. Then came back. Just because this, our last line of defense, which is our higher low, failed to give us a new higher high, it means we'll be attacking this low. We don't want to see this low again. It has fucked up. Yes. So we would wait for the price to what? Break this trend line. So let's say this neckline or your last line of defense, anyone you call it. You wait for price to what? Break that line. Sorry, my hand is not straight. You wait for price to break that line and give us what? Breakout and what? A retest. Do you understand? You could either enter at breakout and retest, or you enter once the body closes. Do you understand? But you don't want to enter. This is a weekly time frame. We're not using this as directional bias. So once you have seen this double top, you want to start looking for sells, more sells, and more sells. Do you understand? So you want to drop down for a weekly time frame to a daily time frame to look for selling, selling momentum. You drop to your 4-hour time frame. You know how to do that. You'll be doing the top analysis very soon, not now. So that is very much for your double bottom and your double top. Now your head and shoulder, one of the most. This head and shoulder is one of the most beautiful price I like seeing in this world, in this trading world, both crypto and forex. I love this guy. I love this guy, head and shoulder and inverse head and shoulder. So head and shoulder pattern is also a trend reversal pattern. Do you understand? It's a trend reversal pattern, potential trend reversal pattern, like calling potential trend reversal pattern, until it actually takes out that reversal formation before I can say yes, it has done its primary duty. So yeah, it forms at the peak. It could